Right, okay, good afternoon, ladies and gentlemen. Firstly, I would like to thank MPOC for giving me this opportunity to speak at the POTS seminar. So for today's presentation, oops. Okay, why is it moving by itself? Okay, so for today's presentation, I will start off talking about how CPO price has performed this year against last year, and then we'll do a bit of study on the impact of El Nino on CPO supplies so far this year, and we take a look at what are the prospects for supply going to 2017. And then I'll discuss a bit about China and India demand for palm oil, talk a bit about Indonesian biodiesel progress, and soybean supply prospect before I conclude on our price outlook for this year as well as next year. So if you take a look at CPO price year to date, if you compare this year's price, sorry. Right, if you just compare this year's price against last year, you can see that CPO price for the most of 2016 is trading at much higher price compared to 2015. If you take the low point of 2015, CPO price was trading at about 1,800 ringgit per ton. And then at that point of time, supply was pretty high, stocks was quite high. And because of the El Nino, CPO price started to climb, reach a high of about 2,700 on 2nd of April 2016. But the price are not able to sustain at those levels for long. You see a correction in prices sometime in July. It reached a low of about 2003. I think there was on concern of potentially stronger supply coming on stream in second half of 16. But as it turned out, supply recovery was much slower than expected, and you start to see another rally because of the very tight stockpile. So we hit a new high at 2,914 sometime in September, due mainly to the very tight supply situation that we are seeing in the market. So if you take a look at Malaysian palm oil stock, the latest figure is about 1.5 million tons, and that suggests a very tight supply situation. So to take a look at the impact of production for Malaysia, so for 9 months this year, production fell about 15%. There's a decline of 2.3 million tons of supply. We are projecting a 10% decline in production for Malaysia for 2016. We're looking at 17.9 million tons. But looking at the September figures, and based on what I've been hearing from the planters, based on October numbers so far, it appears to be quite optimistic because to achieve this 17.9 million tons production figure, we need fourth quarter production to be 5% higher than a year ago. So that would mean that October production has been pretty strong, and if it does not meet those kind of projection figures that we're looking at, there's potential downside risk to this number. And then we take a look at the monthly yield trend for Malaysia. I think what you can see here is that the February monthly yield figure of 0.98 tons per hectare is the lowest since January 1999. What we can see here is the recovery in the monthly yield from the low point to the highest point this year, and so far we have numbers up to September. It's not as sharp as what we used to see historically. So that has to do with the fact that potentially, because not only are we having the effect from the El Nino in the previous year, we also had some drought experience in parts of Malaysia in 2014. So this year we are seeing two effects, one from the drought in 2014 and the other one from the El Nino drought in 2015. And that's probably the reason why the yield is much lower than historical experience, and also the recovery has been slower. Then we take a look at the breakdown of the production by states. So I think if you look at production in Malaysia, there are 5 states that we concentrate on. The 5 key producing states are Sabah, number 1, followed by Sarawak, Johor, Pahang, and Perak. Now these 5 states account for about 88% of the country's production. So what we can see from the El Nino impact this year is that the Peninsular Malaysia estates were harder hit. They fell by about 20% for the first 9 months. The most resilient state is Sarawak. Their production fell by only 2%. Also interesting from this chart, you can see that the East Malaysians' share of total production in Malaysia is growing, and they now account for close to half of the total production for Malaysia. So going forward, I think for recovery in yield, it's important to look at some of these key regions to see how fast the recovery in yield trend in 2017. Now, because Indonesia does not have official statistic on their production, so what we did was we take a look at some of the production numbers from the key palm oil producer in Indonesia. So this is a snapshot of their quarterly production figures. But generally, if you look at the first half numbers, production for Indonesia is down roughly by about 20%. This is significantly much lower than what most of the Indonesian planters were expecting. If you tally up the yield on a quarterly basis, you see similar trend. Production down about, yields are down about 21% as well. So the range roughly is somewhere in the region of 20 to 24%. But what is more interesting is to look at the trend, and you can see that basically the effect of the El Nino on the Indonesian estates are mostly felt in second quarter of this year. This is evidence because if you track the quarterly production numbers of all the Indonesian planters, you can see that second quarter production for this year is much lower than first quarter. But historically, the trend has always been that second quarter production should be much higher than first quarter. So that suggests that most of this impact of El Nino is felt, at least for the Indonesian estates in second quarter, and this is reflective of the drought that happened sometime in July to November 2015. Now I put up this chart again. This chart we put up in one of the earlier El Nino event organized by MPOC, basically to now look at the latest El Nino event and compare them to the previous. So the latest El Nino event is a strong event. Year to date, production is down 15%. If you compare to the last 2 strong El Nino events, the impact is far bigger than the 1997-98. If it turns out that this year's production is down about 10%. Now, if we look at it on a global basis, now because of the lack of statistic from Indonesia, but our gauge from speaking to planters, we think that most likely production from the key Indonesian producers will be down about 10% this year, but you do have younger estates as well, which are showing much lower decline in production. So overall, I think for Indonesia, maybe we're looking at about 5 to 10% drop in production. On a global basis, combining Indonesia and Malaysia, maybe about 5 to 10% drop in global output for 2016. Now, in order to try and gauge the expected recovery in production going forward, we thought we'd take a look at how this El Nino compared to 1997-98. So what we did was we drew up the monthly yield figure. If you look at the chart on the left, far left. So we drew up the chart from, because the last 97-98 El Nino is started in May, and we thought this El Nino probably started sometime in June 2015. So we tracked the monthly figures, monthly FFB yield figure from Malaysian estates. So you can see that the red line, which is the current yield, they are trending. They are quite similar to what we saw in 97 to 2000. So if this yield trend continue to follow what we experienced in 97, 98 El Nino, then most likely we probably see a peak in yield either in September or October, slightly to trend down, and historical experience suggests that the yield that we're going to experience probably in January, February could be similar or lower than the previous year yield, and then the sharp recovery is likely to come only in the second quarter of 2017, and this is for Malaysia. So from our sense is that the production impact from El Nino for Malaysia is more likely in first quarter of this year, so another effect could happen first quarter 2017. For Indonesia, maybe the secondary effect from the El Nino will happen in second quarter 17. So a meaningful recovery for production from both Indonesia and Malaysia estates should be roughly around second quarter for Malaysia and third quarter for Indonesia. So that's a view on supply. Moving on to demand for palm from China. So China is the second largest importer of palm, and what we can see here is the China shares of Malaysian palm oil exports has been coming down. Historically, we used to export roughly around 4 million tons, at the peak about 4 million tons of palm oil to China. This year we are doing about 1.3 million tons for 9 months. You can see that market share in terms of palm oil export to China has also been declining. So to take a look at why this is the case, so initially we thought that we're losing market share to Indonesia, but that's not the case because if you take a look at Indonesian palm oil export to China, it's also fallen. In all, we estimate that probably China imported roughly about 1.2 million tons less palm oil this year compared to last year, combining imports from Malaysia and Indonesia. So we think that the weak demand is partly due to the fact that China is releasing rapeseed oil reserves. From what we gather is that, China released about 2.3 million tons of rapeseed oil this year. So that could have affected the demand for palm. At this moment, China still has roughly about 3.4 million tons of rapeseed oil reserves. And from papers presented at this event, suggests that they could potentially release a further 1 million tons or so by the end of this year. So this is slightly negative in terms of palm demand from China. The other factor affecting Chinese demand could have been the high imports of soybean and the additional oil from the crush of soybean has also affected demand for palm. I would say the only good news from China is the fact that the stocks at the ports currently is at very low level. You can see that it's currently at about 300,000 tons. That's way below historical holdings of stocks in China. So for 2017, we are expecting a better demand from China, basically coming from replenishment of stocks at the port because it's currently very low. And also we are expecting the Chinese government to draw down less rapeseed oil going into 2017 with most of the rapeseed oil expected to be cleared by this year. Then we take a look at India. So if you look at India, the demand has been fairly healthy, but this year it has come off a bit. India is the largest consumer of or importers of palm oil. And we take a look at why the demand for this year has been a bit weak. And then we take a look at some of the imports of edible oil figure into India. What we can see here is that palm oil is basically losing market share in India this year. India actually imported more edible oil this year, but palm oil share is declining. They imported less palm oil. And you can see also Malaysian palm oil export to India is declining. But when we take a look into the prices, landed prices of edible oil in China, you can see that sometime in June this year, the difference between refined oil and crude palm oil landed price in India is similar. So it looks like the refiners in India are not getting a lot of margins from buying palm oil and refining them. So that could have been one of the reasons why we are seeing weaker demand for palm oil in India. The good news is that recently India lowered the import duty for palm. They kept the duties for other edible oils. So this is likely to be positive for palm because they'll be slightly more competitive compared to the other edible oils. So that could potentially encourage imports of palm oil going into the later part of this year. The other point I just want to touch on is on Indonesian biodiesel mandates. The latest statistics show that Indonesian consume about 1.95 million kiloliters of biodiesel in January to August. If you analyze that, suggests that Indonesia is going to end the year with about close to 3 million kiloliters of biodiesel. So that roughly is about 2.5 million tons of palm. I think this is a big increase from what they achieved last year, so that's a positive. But it is broadly in line with market expectations, and it's way below the government original target of 6 to 7 million kiloliters. Going forward, how much Indonesia is going to consume biodiesel in 2017 will very much depend on the enforcement. If the government does not enforce biodiesel beyond the subsidized sector, we're probably going to see a flat year in terms of biodiesel for Indonesia. Relative to oil price, at today's CPO price against oil price is not economical to basically use biodiesel unless you have some form of government support. The last point is on US soybean, and US is a major producer. They are currently harvesting their soybean, and this is the previous projection from USDA. They just updated it yesterday. Basically, you can see that the production estimates for this year is roughly about 4.26 billion bushel. That's roughly about 8% increase. So we are on track for a bumper year in terms of soybean crop in US, and that's negative for prices in the near term. And this is basically a picture on the progress of the soybean crop. And you can see in terms of the crop conditions, the red line at the top shows you how many percent of the soybean crop in US has been rated good and excellent, and you can see the red line is ahead of the condition of the crop over the last 4 years, so suggesting that they have a near perfect year in terms of weather condition for soybean crop. The last part of the chart basically show you the progress of the soybean crop, and currently we are at the harvesting stage, which should be done maybe by October or November. So I'll just conclude with our price view. So our price view is that we expect CPO production to recover, more so in Indonesia than Malaysia, going into the last quarter of the year. In Malaysia, we think that the yield improvement will be much weaker than earlier expectation. But for Indonesia, based on latest estimates, suggests that Indonesia production has started to recover in September. It's up about 20% month on month. So we think that prices will be supportive in the near term basically because we have very low stock in Malaysia of about 1.55 million tons, and also the recovery in Malaysia is not that strong. So we are expecting prices to be range-bound. The support should be about 2004. Going into 2017, we think first half price will be better because earlier we showed a chart suggesting that production could dip again potentially in the first quarter of next year. So that could potentially lead to better prices. But going into second half, we could see CPO price coming off, maybe give up all the gains, whatever gains they achieve in the first half and more. On an average basis, we currently have a forecast of 2,600 for CPO price for 2017. And for this year, we are projecting 2,450, but it looks like it's probably going to end just slightly higher, maybe 2,005 or 2,550, if we sustain current price level. Key risks to our price projection, obviously, we are not expecting China to release a lot of oil, rapeseed oil next year. If they do release more, there could be a risk to our price forecast. We are projecting crude oil price to be at about current level. Weaker, if global growth is turned out to be weaker, there could be a risk, as well as Indonesia not carrying out their full mandate. Okay, with that, I would like to conclude my presentation. I would like to thank everyone for their attention.